Hello everyone and welcome to this video from Optimal Ninja. Up on screen we have the June contract for ES for Wednesday, April the 24th, 2024. Again, there's nothing particularly special about this session. The setups I'm describing repeat almost every day, but this one is particularly instructive because we have a ranging market for the first hour and then a downtrend, so we can examine a few different setups. A quick recap about what we have loaded on screen. Firstly, Optimal Ninja snap bars, which I covered in the previous video. Secondly, Optimal Ninja Quartz, which paints the inside of the bar according to Smart Trend Finder and the outside of the bars according to Smart Entry Finder, which I also covered in the previous video. And finally, the unfolding session midpoint and quarter lines indicator, which comes with Quartz. Again, I've disabled other elements of Quartz just to keep these early videos simple and to introduce the concepts one by one. Before we look at the trades, a brief word about session midpoint and quarter lines. Midpoint is simply the halfway point between the high and low of the session at any one time, and quarter lines are simply 25% retracement levels off the highs and lows. The reason why these levels are significant is twofold. Number one, they are a matter of fact for all traders. Whether you're trading 1 minute bars, 15-minute bars, hourly charts or snap bars, the midpoint of the session and quarter lines are always the same and are therefore relevant to all traders. Compare that to, say, loading Bollinger Bands on a 5-minute chart. They really have no meaning to anyone not trading 5-minute bars. So there's an important principle here. Levels that are relevant to more market participants are likely to be more significant. And number two, they are a barometer of value. In equities trading, an institutional trader or algorithm might want to build up a sizable long position in a stock, and of course he wants to split that out into tranches throughout the day. One of the ways his performance is measured is what his average buy price was. If he manages to buy consistently in the lower half of the day's session, he's got relatively good value on that stock. If, however, his buy price was in the upper half of the day's session, he's got relatively poor value. So the middle price of the session is extremely important in gauging value. Of course, on strong trend days, price is not going to pull back 50%, and the best value the trader can get is when price pulls back by 25%. So the 25% level then becomes the significant point. So how do we use these levels in ES trading? The simplest way to think of these is as potential support and resistance, and therefore we always want to watch how price reacts around them. So with that said, let's look at some trades. This is the first bar of the equities session, and although it's giving an uptrend signal, you'll remember from the previous video that we don't chase the market and we're mainly looking to buy at value, that is, buying on the close of a down bar. The bar also closed at session midpoint in a ranging environment, so this price certainly doesn't represent great value, so we absolutely don't want to buy there. So where's the buy price? Well, the obvious level is here, as it's a pullback to this congestion area and also the lower quarter line. So entering there seems good value and makes sense. In terms of your stop, the market would have to do quite a lot of work to break through this support area, so the safest stop placement is probably down here. But with a stop 2 bars away, you'll certainly want to target a profit of 2 bars or more to make that an acceptable risk-reward ratio. You'll notice that the prior bar here also gave a smart entry short signal. It was possible to take that as a short, but given all this near-term support, it was only going to be a quick scalp back to the lower quarter line. But back to our long trade. So we enter here, we have a quick 4-bar rally to the upper quarter line, and then price finds resistance and comes back to midpoint. We're still in long mode, so it's possible to buy the low of this down bar back to midpoint, which was a previous minor reversal. On this trade, my stop would be just a bar away to make this a 2-to-1 risk-reward ratio. We have a similar setup a couple of bars later, but with this second reversal off the upper quarter line, we formed a tight 2-bar trading range, which makes these two setups a lot less attractive. Coming into 10 AM, we've moved into down mode, and so we're now looking for shorts at value. Remember, we don't chase the market, so we're seeking a decent short price. So this was a sound entry off midpoint and these overlaps to target the lower quarter line, but it ended up as a loser as price re-breaks midpoint to test the upper quarter line. It's perhaps worth stating at this point that all traders are operating under a balance of probabilities model. Part of that is accepting that logical trades sometimes fail, and you must exit if the premise of the trade is invalidated, which in this case was that this level did not find sellers as expected. Now, there will always be a trader who starts moving his stop up here or here or here in the hope that the trade will turn around, but then the market just carries on higher, and needless to say, that doesn't end well. Don't be that trader. Now, I could do a whole video about just that topic, but for today I will say this: stick to the plan and accept small losses. Moving on, I'm not keen on this up bar as a short entry, as we appear to be oscillating around midpoint and there's a danger of repeating the previous trade, but this certainly is a short signal worth taking, targeting either the lower quarter line or the prior lows for 12 to 24 ticks profit. Here we have another short signal from Smart Entry Finder. Notice how price pulled back into the lower quarter line on the prior bar and quickly found sellers. Now this is a bearish sign that now targets at least the prior swing low. By the time we get this signal, it's likely we've entered into a substantive downtrend. We've now got several bars closing below the lower quarter line with a clear break of this obvious support level. Notice how rallies towards the lower quarter line are repulsed with selling, and in particular the first touch of the lower quarter line in this 10-bar move is sold off. That is a setup that you'll see many times. So this is another short signal with a stop above the bar high and an initial profit target of at least the bottom of this 4-bar range, or you could trail your stop above the highs of these bars for a wider target. The final Smart Entry Finder signal is this bar, which is perhaps not surprising as it's coming off this clear downtrend line. However, one would be shorting into obvious support here, so it's possibly only going to be a 1-bar scalp. Finally, on the right of the chart, you'll notice that price bursts through the lower quarter line with a Smart Trend Finder signal. In particular, note that there was a failed attempt at selling at the line, that's this bar tail here, and a breakout pullback towards the line, that's this tail here. These two tails are highly significant. They may not be sufficient in themselves to warrant buying just yet, but certainly they are a heads up to look for long entries and not shorts. And up here we easily broke through midpoint, indicating that buyers were willing to overpay to get in on this trend, so you might want to consider buying on the first pullback of this trend, which was this down bar here. And now we've run out of bars, so I will bring this video to a close. My name is Richard. I hope you found this video insightful. For more information, head over to our website at optimalninja.com or comment below. And as always, all the best with your trading.